You know, trying to predict the price of electricity, it's got to be one of the toughest forecasting challenges out there. And it's a market that's just getting more and more volatile every single year. But what if we could build a model that doesn't just guess the price more accurately, but actually understands the fundamental physics and economics of the power grid itself? Okay, let's dive into a research paper that promises to do exactly that.
So, first things first, we need to really get a handle on the core challenge we're trying to solve. I mean, why is this so difficult in the first place?
Well, the short answer is that our entire energy grid is changing, and fast. With the rise of renewables like wind and solar, we have these amazing periods of almost free electricity. Sometimes prices even go negative. But, and this is the big but, when the wind isn't blowing or the sun isn't shining, we have to fall back on expensive fossil fuels. And that causes prices to spike like crazy. So you've got this market with these extreme highs and lows that are just notoriously hard to predict.
And this is where you can really see the problem in action. That black line, that's reality. You can see those super sharp peaks and those deep valleys. Now look at all the other colored lines. Those are the forecasts from the old school models. See how they just kind of smooth things out? They completely miss the extremes. Or they overshoot, predicting prices that are way, way off. That gap between the colored lines and the black line, that's the problem we need to solve.
For years, the people trying to forecast this stuff have basically been split into two main camps. And each one has its own way of tackling the problem and, well, each has its own big flaws. On one side, you have your fundamental models. I like to think of these as the physicists of the energy world. They try to model the market from the ground up, using the physical limits of power plants, fuel costs, CO2 prices, the whole shebang. On the other side, you've got the data-driven models. These are more like the historians. They use machine learning and stats to find patterns in past data, and then they just project those patterns into the future.
And yeah, this diagram just nails the dilemma, doesn't it? The data-driven models are quick and they can see the volatility, but they get totally thrown for a loop by new market conditions they've never seen before. Fundamental models, they can handle new scenarios, but they're slow, and their forecasts are often called too flat, meaning they miss all those real-world price swings. So the holy grail, the thing everyone wants, is a hybrid that can give us the best of both worlds.
And here's a perfect real-world example of what I mean. Take a look at the green line. That's the fundamental model. See how it's just kind of flat? It misses all the drama. Then you have the blue line, the data-driven model, and it's totally overshooting the mark. And the key thing here is that neither of them, right? Neither of them come close to matching that black line, which is what actually happened. We need a better way.
All right, so to really get our heads around this breakthrough, we need to talk about the economic engine that drives the whole electricity market. It's called the merit order.
So what is the merit order? Put simply, it's just a ranked list of all the power plants that can possibly feed electricity into the grid. At the very bottom, you have the cheapest stuff. Think solar and wind, where the marginal cost to produce one more bit of energy is basically zero. As you move up the stack, you get to the more expensive sources like coal, and then at the very top, you have the most expensive peaker plants, which usually run on natural gas. Okay, so how do you actually build this thing? Well, it's basically a four-step process. First, you figure out the marginal costs for every type of power plant. Second, you get the available capacity of each of those plants. Third, and this is the key part, you stack them up, from cheapest to most expensive. And then fourth, you see where the total demand for electricity crosses that supply stack. And that single point, that sets the price for everybody. And boom, here's what it looks like in practice. Each of those colored blocks, that's a different type of power generation stacked one on top of the other. That vertical dotted line, that's how much electricity we all need in a given hour. And the price, shown by that dashed red line, is set by the cost of the very last power plant that we had to turn on to meet that demand. It's a really elegant picture of a super complex market. Okay, so this is where it all comes together. This is the big breakthrough from the research. Instead of treating the fundamental model and the data-driven model as two separate things, the authors figured out a way to fuse them into one.
And this quote, right here, this is the secret sauce, straight from the paper's abstract.
See, the old fundamental models relied on experts to assume a bunch of key parameters, like how efficient a gas plant is. This new approach, it just throws all those assumptions right out the window.
So here's the really clever bit. The model uses the structure of the merit order, the physics of it all, but instead of having experts guess at the details, it lets all the historical price data tell it what the parameters like plant efficiency must have been to create those prices. It's kind of like working backward from the answer to figure out the inputs. It's a fundamental model that learns and adapts just like a machine learning model.
So does it work? What's the payoff for this super clever hybrid approach?
Well, it turns out the payoff is huge, and it comes in two flavors: way better forecasts and, maybe even more importantly, much, much deeper insights.
First, let's talk numbers. When they tested this new model against the best of the best machine learning models out there, it was about 10% more accurate. Now, 10% might not sound like a crazy number, but in a market like this, a 10% improvement in accuracy is massive. We're talking about something that could save millions and millions of dollars.
But you know what? Accuracy isn't even the whole story here. The real game changer is that this thing isn't a black box. You know how with a lot of AI models, you get an answer, but you have no idea how it got there? Not here. Because this model is built on the real-world structure of the market, it can tell you why it's making a prediction. It lets you pop the hood and see exactly how the engine is working.
What does that mean? Well, for starters, the model can tell you exactly which power source is the marginal one, the one that's setting the price for the whole market in any given hour. Is it a coal plant, a gas plant? This kind of insight is just invaluable for really understanding what's driving the market.
And it gets even cooler. The model can actually spot these huge economic shifts as they're happening in real time. This shows how it caught the fuel switching during the European energy crisis. When natural gas prices went through the roof, the model saw the grid switch over to burning more oil. And then when gas prices came back down, it saw the switch back again. It's not just predicting a number, it's explaining the economic story behind that number.
All right, let's pull back for a second and look at the big picture. Why does a better forecasting model really matter in the grand scheme of things?
Look, our energy grid is getting more and more complex every single day, especially with all the new renewables coming online. We desperately need better tools to get a handle on it. A model like this gives us the clarity and the accuracy we need to navigate this energy transition, to keep the grid stable, and to offer some real transparency in a market that's only going to get crazier. And that brings us to a final big idea here. For so long, forecasting has just been about trying to predict a number. But maybe the real goal shouldn't just be prediction. Maybe the goal should be understanding. This new approach, this data-driven fundamental model, feels like a huge step in that direction, moving us closer to a future where we don't just guess at our energy world, but we can actually truly comprehend it.